The S&P 500 has bounced in the past 2 weeks about 5.5% since that correction. And so far, everything that we have said about this pullback has come out perfectly. We didn't freak out. We didn't worry. We didn't call the top. We didn't worry about a bubble. Everything that we have said has basically been playing out. And what I want to do now is update where I think we're headed into the end of 2025 and if I think a Santa rally is happening. Now, to get you up to speed, if you did not watch our prior analysis, we are now and have been in a bull cycle for the S&P 500. The way that we know this is we zoom out to a monthly chart and we look first and foremost at the BX trender. Now, the BX trender is a buy-sell pressure indicator at the bottom of your screen that mixes a MACD and an RSI. There's a free course down in our course library showing you how to set it up if you want to get it on your charts. Basically, when this indicator is increasing light red or green, it means that we are showing buying pressure and that we are in a bullish cycle. You are going to see that the last time we got an entry criteria for a bullish cycle was after that correction in May and April, and the newest cycle started June 1st when the price was trading at about $587.75. Since the start of that bull cycle, the S&P 500 is now up about 16%. Now, the last time that we saw a bull cycle prior to this was all the way back here in February of 2023. And that bullish cycle lasted for close to 2 years and rallied nearly 36%. You will see that we had as well another bullish cycle from June 2020 after the COVID collapse, and then rallied for multiple years for a 48% profit. From there, we would have not traded through all of 2022. This would have kept us basically out of that bear market. We would have had a small 1.4% loss and then entered that secondary bull cycle. So this is normally a very strong indication that a massive move to the upside for the S&P 500 is about to happen. Now, if we look at the data for just the monthly BX and this strategy over the past 24 years, we would have had 23 of these bull cycles. We would have had a 655% return on just the S&P 500 with a max drawdown of 14.9%. That is really, really good, taking into consideration the fact that during the dot-com bubble, or I should say dot-com crisis, the S&P 500 sold off nearly 47%, and during the '08 financial crisis, sold off over 56%. So a 15% drawdown is very, very good. You'll see that the win rate, however, is only about 43%. So it's not like this is highly accurate. It's just when this actually happens, if that breakout occurs, it is normally massive. And when you're trading any type of system, the win rate is not the most important thing. The most important metric is actually this: your risk versus reward, or how much you are making when you're right versus how much you are losing when you're wrong. And the risk versus reward here is staggering, over 10-1. This means that when we are right, which is about less than a coin toss, we're going to make 10 times what we're going to lose when we are wrong. So the average win here is 28%. So think of it that the average bull market is about 28% to the upside, and the average loss is only 2.85%. This is why so many traders and investors fail, because they don't focus on risk versus reward. They focus on trying to be right. We, on the other hand, understand with our system that being right doesn't matter. It's how much am I making when I'm right and how much am I losing when I'm wrong. Now, if we go through what we just stated there, that the average time that we get a breakout is about a 28% rally, then we can look at where we are right now. Right now, we're up about 16% from that initial entry, and we've only been breaking out so far for about 5 to 6 months. And so what this means is that just by average, we should continue to break out over the next 6 months up to $750 on average. Best case scenario, we would continue to run over the next year up to about $850 or $900. If you want to get access to all of the indicators that we use in these videos, as well as learn how to implement them within the strategy, go ahead and check out the link to our trading library down below. You'll get access to the BX Trender, the Smart Money Mastery and Smart Money Zones, and the volume profile. Each course shows you how to actually set up the indicators, the proprietary settings. Over 20,000 students have implemented this into their trading system and are seeing consistent profits from as low as $10,000 all the way up to over $3 million. The link will be in the description, which seems crazy when we're trading at all-time highs. But I want you to understand that back here, when we ran 37%, we were trading at all-time highs each and every single month. When we broke out here during 2020 and ran 50%, we were trading at all-time highs each and every single month. So when people talk about AI bubble or crash, we are nowhere near that at this point. And more importantly, in my opinion, we haven't seen a crash obviously since COVID, but really since the '08 financial crisis. All of these 5 to 10% corrections are just that. They are corrections. Even at worst case back in April, we only corrected about 20%. So I just want you to understand that if the AI bubble does ever burst and there is a massive correction or crash, that could be as high as 20, 30, 40%. And that's why you need to be watching the monthly BX Trender. Because if this bad boy closes red, that's where we could have multiple months of a bear market, or as we've stated before back in the '08 financial crisis, a massive crash. So now we understand and we know that the monthly long-term setup is still very, very bullish. Well, let's look now at the weekly time frame. You're going to see that support level at about $655 to $660 never broke. Now, if we overlay a monthly BX Trender at the bottom of your screen on a weekly time frame, you're going to see that basically each and every single time price pulls back, it's just a dip buying opportunity. Now, there is a chance that the market rejects here. We don't know what's going to happen, but I've seen a lot of people stating that there are a head and shoulders pattern in the market, that the market's going to reject here. But the thing to understand is that in most cases, when we get these pullbacks, but that monthly BX is still in a bullish cycle, they're just dip buying opportunities. And it looks like that's probably what's happening here on the S&P 500. If the monthly is green and we are in a bullish cycle and a bullish market, and we're expecting another 12 to 15% rally in the next 6 to 12 months, and on top of that, now the weekly BX is showing buying pressure, which you can see here at the bottom of your screen, this is normally an indication that the rally is going to continue. And this is why I never short the market, and it's why I never short stocks in general. I would rather trade something that is consistently going up as long as it has buying pressure behind it on the monthly time frame, and dip buy every single pullback as opposed to trying to be cool for the internet and short the top. Because the last time that I was shorting the top was back during COVID, and there was no reason to be shorting this, right? Everyone and their mother thought that COVID was going to be the end of the world and the end of the market, but look at what was happening the whole time on the monthly BX Trender. It was just increasing. It was showing buying pressure the whole time. And if we look right now, the same thing is happening. The weekly chart is pricing in a move up to $750 by the end of March. That means that both our longer term and our short term model are both bullish. And that means I am bullish. It doesn't mean that I'm going to be right. We obviously know that our win rate historically is only about 60%. The win rate between both of these models is about 50%. But if it's right, we should see a sizable 5 to 10% move over the next 6 months. And until we start to see those bearish markers again in the system, then I will remain bullish.